Hey, what's up, everybody? This is your boy Thavian, coming in on behalf of the Patreon. Uh, Here to shoot a little game to you guys about a checklist that I created. There's a lot of people in the Patreon, new trappers, feel like they are having issues with getting started. They need a step-by-step process. If you've actually taken the course, your step-by-step process is in the sauce of the course. Where it says the sauce, that's just your step-by-step process. But if you're still unclear on how to get started, just a quick, simple checklist that I created, that I use, that is pretty effective. So if you're just looking for something to get started on, we can go off my checklist here. So first thing you want to do is identify your 10 stock checklist. Trap tells you that in the course. Uh, 10 stocks. When you're picking those 10 stocks, make sure they're stocks that move. What I mean by move, they move $10 to $15 a day, whether it's up or down. You want stocks that move. In order to make money in options, you cannot make money with stocks that only move 50 cents or $1 here or $1 there. We need that thing moving. So when you're identifying your stocks on your checklist, make sure that they're movers. Also, your 10 stock checklist kind of creates balance. One might be running, and then you can use another play on your checklist. So you're always consistently making money. It doesn't have to be the same play all the time, but between those 10 stocks, you can consistently make money buying the dip and entering at great entry points. Next thing I'll tell people to do is decide how much you want to invest in your play. Decide how much money you want to invest in your play. If you're starting out with small accounts, $600 to $1,000, if that's your number, go ahead and identify that, because you're going to need to know that number before jumping into the options chain. If you one of the bigger accounts, you can do 1K to 5K, 5K to 10K. Go ahead and establish that number, because once you have that number, then it's going to help you navigate more when you're in the options chain. Next, you want to go ahead and find your strike price. I'm not going to really cover that, because if you took the options course, Trap breaks down his formula on how you find the strike price. So once you find the strike price, then we want to go ahead and go to our brokerage account. Our brokerage account is where you're going to end up looking up your options chain. So after you have identified the strike price you want to choose, I like to go to my brokerage account, and based on the strike price I chose, I want to look for an expiration 6 months out. That's where I start. Dealing with Trap, you're working with swings and leaps. So a swing is like 6 months, a leap is going to be 12 months. So I always start in that happy middle. And the reason I'm starting there, because most of the time the numbers are going to fall in my price range. So once you identified the strike price, you went to an expiration 6 months out. If the numbers, as far as the premium price of the contract, meets the money you're trying to spend, then you can go ahead and execute. Now, some plays are a little more expensive than others. If you got 1K and you can get one contract out of that 1K, go ahead and execute. But if you can look through the options chain and find different expiration date, same strike price, expiration might be a little closer than 6 months, maybe 5 or 4, and you can get 2 contracts out of the deal for the same amount of money, that's the play I would run. Keep in mind, you're still looking for your good open interest and things like that. But if you can spend that amount of money and get 2 contracts versus 1, I would go with that play. If you don't feel comfortable doing that, then continue to buy 1 contract with the same amount of money you was willing to spend based on Trap's formula. Adjust the expiration if necessary. Like I said, if you're trying to save money and they're not in your price range, but you want to get in that play, you can adjust the expiration. That's where going 6 months out to 12 months out. Just keep in mind, when you're pulling up your options chain, look through the options chain. There are different options in there that'll help you. And when you're adjusting the date, explore that option chain from top to bottom. Once you identify that options chain, I will always like to look at my delta. Now, good delta is anything above 50 cents. But if you're adjusting your options chain to get a lower price to meet your budget, I'm okay with expirations going out for your strike price, and then you found something within a delta of above 35. Anything above 35 is still good, but ultimately above 50 is great. That's for your initial entry. But if you're trying to stretch your coins out a little bit and get 2 contracts, if you can get 2 contracts and still have a delta above 35, I think you're still doing good there. Keep in mind, these are just what would I do in order to increase my wealth in the game. Once you've identified all of that, versus going from, you'll go to your limits and your market order. I always choose a limit order. Never really pay for the market order because the market order is kind of ran up a little bit. If you can save a little money, go ahead and create a limit order. When you see those limit orders, you'll see a bid price and an ask price. Bid price and an ask price. The ask price is always ran up. And when you do the ask price, that's when you just set market and your play is going to execute on whatever that cost is. If you can save a little money, by all means, do a limit order. Limit order just requires patience. So if the price is $2 and they're asking for $2, but there's a bid in there for $190, go ahead and set the bid for $190. The prices are always going up and down. Eventually your price will hit. And if it don't hit, practice patience. It might not hit right then. I know everybody want to get into play right away. Just practice patience. Keep in mind, setting the limit order, just 5 cents is $5. And $5 over 100 contracts is pretty expensive. It can make you a lot of money, and it can also cost you a lot of money. So I always say be patient when you're setting in your limit orders. It might not hit that day. But if you're confident in those numbers and you're watching the market go up and down, eventually it will fall back to your price. Going back through the checklist, 10 stock checklist, decide how much money you want to invest. Use TRAP's formula to execute your strike price. Log into your brokerage account. Choose the expiration date 6 months out. Adjust your expiration date if necessary to save money within your budget. Check your delta. Anything above 50 cents is great, but if you need to adjust, anything above 35 is also good. Set your limit orders. Don't go market. Save a few dollars by setting a limit order, and be patient. Be patient. That is going to be the key. Y'all got any more questions? I'm always in the trap. Holla at your boy.